Okay, thank you, Max. I declared personally or any the companies I'm associated with, Richlink. We don't hold any shares in neither company.
Thank you, George.
Okay.
Yeah.
With that, I think we'll just jump into the webinar today. This is our probably eighth event jointly held by Richlink and Tiger Brokers, showcasing Australian companies. In today's session, we're very pleased to have invited two companies in the today we have Spencer Cole, the Chief Development Officer and Chief Financial Officer, to tell us the Xanadu story. Before Spencer starts, I'll just briefly
Please accept my apologies. I seem to have lost sound right when I was meant to be speaking.
George, you appear to be on mute.
Oh, okay.
I can hear again.
Right. I don't know what happened. So I just wasted 2 minutes. I'll start again. This is our eighth sort of a joint webinar event jointly held by Richlink and Tiger Brokers. Today's focus is on copper metal. We're very pleased to have invited two Australian companies to present their story. The first company is Xanadu Mines. Today we have the company's Chief Development Officer and CFO, Spencer Cole, to tell us the Xanadu story. Spencer has a very extensive mining resources career experience as a commercial and project development executive with more than 20 years in the resources sector across multiple disciplines of commercial, financial, engineering, and operations, both in Australia, Indonesia, and the United States, with companies such as ABA Resources, Newcrest Mining, and ExxonMobil. And he has MBA from University of Southern California and Master of Engineering from California Polytechnic University, and a bachelor degree in engineering from University of California, Davis. He's also a member of CPA Australia and Australia IMM. With that, I'll hand over to Spencer.
Thank you for the introduction, George, and thanks for the opportunity to present today. I'll just jump right into it. Xanadu is a ASX and TSX listed exploration and development company focused on critical minerals in Mongolia. As an explorer, we operate on the front end of the mining value chain, where we generate new projects, explore, discover, and define those projects to realize value for our shareholders. We currently have 2 projects in our portfolio. One is Hermagtai, a very large copper gold porphyry project, which is in PFS stage and nearing value realization. I'll talk more about that as we go forward. And Red Mountain, which is a highly prospective project, also in Mongolia in the South Gobi Desert, with multiple styles of mineralization in the target testing stage. And we are also actively working to add additional projects and turn them over within our portfolio. Xanadu has assembled a highly competent, well-rounded management team with experience finding projects, making significant discoveries, and developing those discoveries. It includes a Mongolian national team with a proven ability to operate and explore independently without breaking stride during and after the recent years of COVID. And we have very, very senior representatives from Zijin Mining Group, our largest shareholder and JV partner in the Hermagtai project. Mongolia is not well known as other mining provinces, but it is our competitive advantage. It's underexplored with huge discovery potential. It's on the doorstep of China, the world's largest consumer of metals, has a highly educated workforce, stable and democratic, and it has low ESG barriers due to both small population and a mining culture. Further, infrastructure is in place that's been continually improved by the government for the specific purpose of developing mining. And Xanadu has been in that country since 2005 with the experience and network to operate there. Many in the world are less familiar with Mongolia, but the global mining majors are paying attention. Rio Tinto owns the massive Oyu Tolgoi project and has recently doubled down on its investment, buying out all minority partners. BHP was an early entry into Mongolia and has recently come back to the country via its Explore Accelerator program. And now Zijin, a true global mining major, has made Xanadu its inaugural investment in the country. The strategic partnership with Zijin is now fully in place and demonstrates the quality and potential of the Hermagtai project and their confidence in the Xanadu team. Excuse me, I have to pause. The lights have stopped. Oh, it's been fixed. Apologies, everyone, for the brief blackout. So the deal with Zijin included a top co-investment of 20% at 30% premium to market at the time, and then a $35 million US investment at the project level to earn 50% of the Hermagtai project. This provided funding for the project through a pre-feasibility study to financial investment decision, additional discovery exploration funding, and for Xanadu corporate requirements. And we've been very pleased to work with Zijin as our partner and look forward to bringing Hermagtai forward to construction decisions. Xanadu has undergone a significant re-rate of its share price and enterprise value in the past several months. And really that's the culmination of our prior strategy, which we've very publicly discussed over the past 2 years, which was to upgrade the Hermagtai resource and identify its high-grade core, complete a high-quality and conservative scoping study to demonstrate economics, and then find a credible funding partner with the balance sheet and capability to build and operate a mine of Hermagtai scale. The deal with Zijin was completed in March, and the market, as you can see in that curve below, paid a little bit of attention to that. But the market really took notice when we started putting out drill results from a significant program and pre-feasibility study activity in public releases, and it became very real. Money was actually being spent. This project is being de-risked, and it is heading towards a construction decision. We're now a $160 million company with a funded pre-feasibility study, cash in hand, and a very credible partner to develop our project. Now that we've delivered our prior strategy, we've re-articulated our strategic path forward in 3 horizons. The first horizon is to deliver the pre-feasibility study for Hermagtai. Xanadu is the operator of that study, and our JV partner Zijin is providing input to that and being very supportive. Our second horizon is to make a further discovery at Hermagtai via the funding from our joint venture and also at our second project at Red Mountain. We believe there's significant potential for high-grade growth at Hermagtai, and I'll talk more about that as we go forward in the presentation. Our third horizon is to populate our portfolio with critical mineral projects in Mongolia and the region, test and turn them over at a rapid pace, and establish the next project in our portfolio heading towards another major discovery. I'll talk first about Horizon 1. Our flagship project, Hermagtai, is a world-class resource at this stage. It's 1.1 billion tons, 3 million tons of copper, and 8 million ounces of gold. But more importantly, it has a 100 million ton higher grade core to drive capital payback. It works as a project on its low strip ratio, gold byproduct credits, and that high grade core. We have a very conservative scoping study, or PEA, in TSX language, designed as a low risk open pit mine with a sulfide concentrator and demonstrating a 20% internal rate of return and a 4-year payback. And we have a PFS that's funded through to decision to mine, along with funding for that continued exploration, as I said before. As a reminder, a scoping study, or PEA, outlines what you could do. The PFS, which we're doing now, adds significant data, explores alternatives, and defines what you should do. That will enable that decision to mine. The timeline highlights one of the project's key advantages, with potential for first copper production in late 2027. Most big copper projects at a similar stage and scale would require twice that long as they work through the technical infrastructure and ESG hurdles in their jurisdiction. And there's another example, Oyu Tolgoi, 100 kilometers down the road, went from discovery to an open pit mine in 5 years, highlighting that advantage of Mongolia. The pre-feasibility study is now in full swing, with data acquisition stage nearly completed. Our key message here is that the funding is real, and we're using it to de-risk the project and generate real shareholder value. As part of the pre-feasibility infill program, we will deliver an updated mineral resource in Q4 of 2023, which brings the full mining volume to an indicated classification. Those infill results so far have been very encouraging, with extensions of higher grade zones within the existing Stockwork Hill pit shell and new higher grade zones discovered underneath the White Hill pit shell. Other drilling, in addition to those two, has generally been better than or as predicted in the 2021 resource model, which is very positive. I mentioned the higher grade extension at Stockwork Hill. So this extension is 120 meters of high grade zone towards the surface, which means within the pit shell, we're going to hit higher grade sooner, and it's going to cost us less to get to it. That'll translate directly into more cash without additional cost, and will be upside into our pre-feasibility study. Even more exciting for us as explorers is the fact that we've discovered a new higher grade core underneath the pit shell at White Hill. White Hill is the engine room of the project. It provides most of the volume through the plant. But before the infill program, it did not have a higher grade core. We theorized its existence, but until the infill program, we didn't hit it and lock in where it is. So that's confirmed this theory, and we'll change and improve the mine design as we go through the PFS. In addition to data acquisition, we've been upgrading the Hermagtai camp from an exploration camp into a project development camp, preparing for the construction stage. That includes a connection to the Southern Mongolia power grid with a 35 kV line, and lets us move our diesel generators to backup. This is, I guess, another example of how effectively things can be done in Mongolia. We've achieved that power grid connection in just a few months with a few $100,000, whereas in many jurisdictions, including some parts of Australia, in particular my home state of Victoria, the regulatory burden and cost would be completely impractical. Onto our second horizon, which is a world-class discovery. Our strategic partnership with Zijin also funds continue discovery, exploration, drilling at Hermagtai. That means drilling outside of the pit shells and looking for new opportunities. We always had a number of targets still to test, and this has given us the opportunity to do that. It's broken into two components. The first is 10 kilometers of shallow exploration for additional open pit resources, and 8 kilometers of deep exploration targeting a large discovery at depth. Our deep program targets an analog to the Oyu Tolgoi high-grade Hugo Dummett deposit, again located just 100 kilometers away in the same mineral belts. Oyu Tolgoi was a bulk open pit project until the discovery of that high-grade deposit, which is at a depth that is below the limits of Xanadu's Hermagtai drilling thus far. So not only have we not properly explored for that, we do know that all of our ore deposits remain open at depth, and all vectors are pointing towards increasing grade, bornite, gold content as we go deeper. Everything's telling us to go deeper, and now we have the funds to do that. For an Australian analog, I was involved in the Cadia Valley deposit in a prior life. Ridgeway and then Cadia East were defined and developed at depth after the lower grade Cadia pit commenced. So similar to Hermagtai, with grade increased at depth, and for Newcrest, this created the financial and production core of the company. I'll talk very briefly about our second project, Red Mountain. Red Mountain's an earlier stage project with multiple types of mineralization. It's a highly prospective, and as our chairman likes to say, it would float a new company on its own if it were located in Australia. Red Mountain is generally higher grade and lower volume than Hermagtai, with a gold-focused target program in place following previous trenching and diamond drilling. We're working to secure a funding partner to progress this project and build on previous strong drilling results. And then our third horizon. Horizon 3 is about the future and about building our portfolio. The region of Asia, including Mongolia, Kazakhstan, southern Russia, and northern China, supports a number of major volcanic belts of mineralization and many large mining projects. However, most of these projects are located outside of Mongolia, despite the belts running straight through. And it really highlights the degree to which Mongolia is underexplored at this stage. Xanadu's portfolio growth mandate is to bring in new critical mineral projects, including copper, lithium, nickel, gold, and the objective is to explore and quickly turn them over, as I've said previously, to find the next major Mongolian discovery and drive the next stage of value for our shareholders. I mentioned that one of Mongolia's key advantages is low ESG barriers and a strong social license to operate. You need these things to get a project off the ground and actually built, and we believe it's core to our business. We do aim to be a genuine partner in Mongolia and the communities we operate in, and I'd encourage you to review our third sustainability report, which was published earlier this year and available on our website. So to close, Xanadu does offer investors a clear strategy, a world-class project that is funded to that decision to mine, decision to construct, depending on what language you use, plus a genuine exploration upside and a path to continued growth and new project discovery. So thanks again for the opportunity to present. I'll finish there, and I'm happy to take questions.
Thank you, Spencer. We do have a few questions that came through for now. The first one, what are the geopolitical challenges that you face while developing such a project in Mongolia?
I guess one thing, if you look at the map, you'll see that Mongolia is sandwiched between Russia and China, which means that concentrate can only go one of two directions, into China or into Russia. We, with Zijin as our funding partner and JV partner, we're pretty confident which direction that concentrate will go, and that will help address any of the challenges related to that. Other geopolitical challenges really Mongolia, because of its position, generates a lot of interest from a lot of different governments and around the world. But it's all very positive, and it gives Mongolia the opportunity to to leverage its position and also to get the proper advice and support from those countries. Major donors and companies or countries that support Mongolia include the United States, Japan, Korea, and they have strong relationships with all of them, as well as their two primary neighbors in Russia and China.
Right. I'm sure you will navigate through that, and particularly with Zijin as your partner. The next question, what are the main factors that set Xanadu mines apart from competitors in the resources sector? I guess you need to summarize what you have just presented.
Yeah, look, I would say that obviously it's difficult to compare Xanadu to companies outside of Mongolia in the region because they're dealing with an entirely different set of challenges and jurisdictions. But what we do have that sets us apart, I believe, in particular, is the team that we've assembled. We have, for a small exploration team, we have people with experience in discovery, in definition, in development, and in operations. As well as having a big partner on our shoulder with Zijin. And I think that really drives a level of interest and focus in us at the moment, while we leverage that capability and develop our project.
All right. Next one is, what are the key milestones for your Kharmagtai project and the timing of those, and what kind of return investors can expect?
Well, starting with the milestones, the Kharmagtai project aims to have an updated resource in Q4 of this calendar year. That'll get published to ASX and TSX. The next key milestone, I mean, there's a number of smaller milestones within the project, but we're aiming to finish the project in Q3 of 2024, at which point there will be a pre-feasibility study, full reports of what this project should be, and a decision to mine made jointly with both JV partners Zijin and Xanadu. In Q3 of 2024, Zijin will become the operator of this project, and we have every expectation that we'll be accelerating into a construction phase very quickly. In terms of the return that could be expected, from an investment, shareholder investment, I can't comment, but I can talk about what the return will come from the project. The project in the PEA stage has a 20% internal rate of return, $600 million NPV, 4-year payback. So in terms of cash flows, the project pays its capital back in the first 4 years. We only expect that to improve through the pre-feasibility study as we incorporate the better infill drill results we've gotten, as well as the technological upside that we deliberately excluded to keep things conservative during our scoping study.
All right, thank you. Looks like that's a
motion sensor. Yeah.
Okay, you've been sitting still for too long. Okay, the next one, what is your ESG policy and practices?
So Xanadu has made a very specific decision to invest in this topic. We have a sustainability policy that I believe is available on our website. We have sustainability reports, 3 of them now, that you can read and really understand where we're going and what we're trying to do with that. Those are available on our website. We put a lot of focus on the local community, and in particular, we put a lot of focus into education and developing local businesses. In terms of More broadly, with regards to ESG, we have some project principles which are that we're aiming to, take the path of lowest emissions and forward-looking activity where it makes economic sense and where it's possible. As a small example of that, we've just weaned ourselves off diesel for power generation at the Hermagtai camp and connected to the grid. That grid is not necessarily a lot greener than our diesel gen sets, but it gives us the opportunity to become more green as the grid becomes more green, which is a priority for the Mongolian government and for the and also for Inner Mongolia and China, which supplies some of the power into that grid.
Right. The next one is talking about you're funded. Is the funding sufficient for you to complete your current run of exploration studies and development?
So the short answer is yes. The funding is sufficient to take Hermagtai to a decision to mine and complete the exploration that we have planned. If we are to invest in Red Mountain, which we intend to do, we need to find a funding partner or draw additional funds ourselves. So that's something we're actively pursuing on our second project. If we acquire a third project and believe it's something, and after initial work believe it's something that needs a serious investment, then we'll need new funding for that as well. So each project has its own solution, but for Hermagtai we are funded. Thank
you. The last question is a bit tricky. I'll just translate faithfully and let you to address it. Okay. The exploration opportunity in Mongolia, how much market cap will that support? Will that support for Xanadu?
Let me think about that for just a second. I think the exploration opportunities in Mongolia are significant. We're not going to use a significant amount of funds in acquisition of new projects. The most likely scenario you'll see is an earn-in, a traditional earn-in, which is what many companies do to come into new projects. The amount of our, relative to our market cap, the amount of money that we would spend on a project depends entirely on how prospective that project is and the kind of mineralization. Ultimately, spend starts small and builds over time if the project looks better and better. I would say Indeed. That within Mongolia, there's potential for monster projects still to be discovered, which would be significant dollars.
Yeah, thank you. I think the future is bright. You can probably say that every explorer needs to have that optimistic view.
Absolutely.
With that, I think yes. With that, I think we'll wrap up here. For those in the audience who still have any more questions to ask, on the screen you can see people's they are the right people to ask those questions. You have their email addresses, and you're welcome to contact the company further. And Spencer Cole, thank you very much for your time and present the Xanadu story.
Okay, thank you very much. I appreciate the opportunity.
Right. Thank you. Next, we have Coda Minerals. Presenting today is the CEO and Executive Director, Mr. Chris Stevens. Chris is an experienced mineral economist, a resource industry executive with focus on resource company strategy, financial modeling, and study management. Chris has held multiple executive and commercial roles across the mining industry, as well as in management consulting and private equity. He has an honors degree from the University of Oxford and a Master of Science degrees in mineral economics from WA University, School of Mines. He's a fluent Mandarin speaker, which is probably rare in the mining sector. And apparently plays music in a jazz band in his spare time. And recently won silver medal in Taekwondo in an international competition representing Australia. So busy man, Chris. With that, I'll hand over for you to tell us the Coda mineral story.
Thank you, George, and thank you for having me on the webinar, and good afternoon to everyone listening. So thank you for the introduction. Yeah, multifaceted person, and obviously it's always good to have a lot of interests, but the core focus is very much on Coda Minerals, which has been a part of my life now for over 5 years. And, you know, I will be introducing today the story, some of the background, and why I believe this is such a fantastic project with a great future. The first thing you can see here is an aerial view of the exploration area. Contrasts a little bit with Xanadu, but actually not dissimilar in terms of a vast, wide, open landscape with very strong ESG credentials. You can see here, this is the perfect sort of place to be building a mine. And that's certainly what we intend to do over the next years. To introduce the company to start with, we were listed in October 2020. We have very few shares on issue, just 142 million shares on issue, which gives a very strong opportunity for upside growth. $4.7 million in the bank as at the last quarterly. So we have quite a strong cash balance for a company of our size. Unfortunately, a market capitalization which has reduced recently. We have a share price of just 18 cents, which I believe is a very strong opportunity to buy when I talk about the financial opportunities of the base project combined with incredible blue sky potential. You may notice one face on here which is familiar, which is Colin Moorhead, this gentleman here. That is because he is on the board of Xanadu as executive chairman. So there is a lot of commonality between our two companies. Apart from what I would believe exceptional governance and a very strong focus on project development, I was quite happy to see that I would be following Xanadu for the reason that you can see that when a company takes a project, possibly a project which is a little bit unloved, I might say, and has a lower share price, but a very strong technical background, you can see the enormous opportunity for increase in share price when you find the right partner. And what I will say is, from the point that Xanadu found Zijin and commenced that next stage in their journey, their share price has risen from around about 2.5 cents up to 10, 11 cents. And that is the journey that Coda is on right now. I am deep involved in looking for and working with and talking to potential partners. And as I talk about this project today, I think you'll see the real strength of this project and the quality of the project, and that it will attract partners looking for exposure to copper and to cobalt in one of the best mining places in the entire world. Just touching on the board briefly, Keith Jones is the former chairman of Deloitte Australia, very experienced accountant. Robin Marshall is an experienced engineer and project builder. He has built over 11 projects in his career. The most recent one was the Gold Road Goldfields Gruyere project, which again is an example of a company that unlocked the value of the project through finding the right partner. And Paul Hallam, one of the founding executives at FMG, and worked on the board currently of Greatland Gold, and also on the board, recently on the board of Sandfire as well, a very strong copper company. So great team, a lot of energy, a lot of passion here, and a lot of experience with the project. We listed in October 2020. The company span out of a joint venture between a company called Jindalbi Metals and Angang and Steel, which is China's second largest steel company. These were the South Australian assets, and they span out into a new company, which we then relisted and have been driving ever since. We started with just 250,000 tons of copper. That is not enough to build a project on, but we knew we had great ground. And so we went exploring, and we turned 250,000 tons of open pit, high grade copper, and we found another 43 million tons at 1.84%. That's nearly 2% copper in South Australia, in a world where copper grades are diminishing rapidly. We started working on the processing, on the mining, looking for the right engineers to take this forwards. And we had enormous success with the sedimentary copper. Where the story sometimes becomes confusing, and I think at times one of the reasons why our share price has suffered a little bit, is that we have a second form of mineralization on the tenure, iron oxide copper gold, IOCG. This is actually the mineralization that the area is most famous for, this IOCG mineralization. We hit something spectacular, great intercepts comparable to some of the grades at Oak Dam West, significantly above the grades at Carrapateena, intercepts over 3%. These have not yet, and I stress not yet, been followed up sufficiently to define a major resource beneath the existing mineralization. The great news for shareholders, we have significant mineralization already in JORC resources. The even better news is that we have major exploration beneath that. There is a vast copper system here in South Australia, and we have not yet fully understood the potential of that system. So why Coda? Well, I've talked a little bit about the history of the project. A very strong team that's been with this project a long time and that knew it before Coda even existed. Exceptional exposure to copper, over 1.1 million tons of copper already in JORC resources. Standout ESG credentials, very, very few issues here. It is an area with many mines. It is an area where the traditional owners, the Coda people, are experienced and already work with BHP and formerly Oz Minerals. Very simple approvals process. South Australia has some of the best processes on the planet. Strong foundational asset. I'll talk to the study in a moment, but we have already put out a study with economics showing over $570 million of pre-tax NPV, net present value, a payback period of just 4.5 years, similar to that payback period at Xanadu. Emerging transformational IOCG asset, so the wider the potential to have and find one of the world's truly great copper deposits beneath what is already an exceptionally strong mid-tier asset, and the potential beyond that to grow both within the grounds and also externally in South Australia. We have several major tenement packages under application right now. The resources, so I'll talk to the existing resources, the JORC resources. 3 areas to mine, all of them the same tenure, clearly, all very close to each other. 2 open pits, and look at those grades. Optimized, well over 1.5% copper equivalent, 1.42% copper in the production target, plus cobalt credits. Our lowest grade deposit still over 1% for an underground deposit. Open pit deposit. Our underground deposit, Emmy Bluff, 1.84% copper equivalent, 1.42% copper, just 400 meters underground. And talking about that thickness, you can see here some wonderful pictures we found of narrow vein mines in Poland, but you can see here mines all over the world. Poland, Kazakhstan, where I've just come back from, Botswana, the USA, all mined deeper and at comparable thicknesses. This is a very strong proposition to mine going forwards. If you have time, please look on our YouTube channel or our Twitter channel, and you can see a corporate video showing the mine plan in much more detail. The study, this was a first pass. This is the basis for optimization. This will improve. A net present value, $570 million at an NPV 8, with sensible copper price assumptions comparable to spot, and an FX, so Australian dollar assumption, well above spot. Nearly $6 billion of net revenue, 1.3 billion of net cash over life of mine. And again, we are exploring, we are growing, and we expect to deliver an update to this study very soon, targeting significantly improved numbers. Again, this is a basis to optimize from. Very strong, very good project, very few technical challenges, simple recovery of metals, simple mining we're using well understood methods, and a capital payback of 4.75 years, IRR 26.5%. Again, expect these to improve. We've seen a slew of projects recently using unreasonable assumptions to get their economics to a reasonable level. This is based on very, very strong assumptions. And again, having been through multiple data room processes with potential partners, the quality of our technical work is being validated time and time again. We are a group that focuses very strongly on technical work, and we care very strongly about putting out good numbers based on real foundations. So again, expect this to grow, expect this to improve. This is a scoping study, but many of the areas were done to a much higher level than you often see in a scoping study. This is available online. In terms of upside, one of the things I'll draw your attention to is there is generally a heavy discount to your net asset value backing when you put out a scoping study. We appear to be discounted more strongly than that. One of the reasons, I believe, is the history of the IOCG, so the very strong intercepts which are ongoing. But the other reason is a lack of a funding path forward. And we've seen that with Xanadu. We've seen that with other companies. So as we unlock that path forward to funding, one would expect to see a significant value growth within the company. There are other opportunities for value growth. I've talked about some of the technical ones, and I'll add to that. But we are optimizing. We are looking to improve the numbers in the scoping study through work to improve the mine plan, to optimize the processing, and to use innovative new methods to increase the head grade of the product going into the mill from an already impressive 1.86% copper equivalent. Clearly, we are leveraged to the copper price. This applies to every copper company, but I believe it applies very strongly to us. If you would like more information on this, we have an independent research report available on our website, and this is also available in Chinese language. So we translated all, I think, 60 pages of this report into Mandarin. So if you would like to read this, this is available on our website. And I'll draw your attention to that because I think it provides a lot of very strong evidence for why the company is currently undervalued and for what you can expect to see. Now, clearly a foundational project is an excellent thing to have. And if it was the only thing to have, I would still be a very happy person running this company. But we have a lot more. Beyond the existing resource outline, we have multiple targets. This is an area of about roughly 8 square kilometers. You can see the main resource outline here, which is about 4 square kilometers, and then major areas beyond that showing drill targets which have been defined by recent exploration work. We haven't drilled these yet. If we can take this project from one which has roughly 14-year mine life, 2.5 million tons per annum production, if we can add resource to this and take this from 25,000 tons per annum of copper cathode production to around about 35 to 40, increase the mine life, then we have a world-class project. Right now, it is a very good project. It is the better end of the mid-tier. But the exploration can take this much further. And that is where you see the potential to unlock significant value. Get the drill rigs turning, find more resources, incorporate this into a mine plan, which on the existing resources are already economic. That is a fantastic position to be in. Beyond that, we're now zooming out. We can see an area about 28 square kilometers, completely untested by drilling. We have just started to work on the exploration. we may find significant additional resources. If you double or triple the size of Emmy Bluff through exploration, then you really very much have a world-class deposit, world-class project on your hands. Again, it's strong as it stands, but with the upside, that gives us amazing targets to focus on. One thing I think the market confuses sometimes is that when a company puts out a study, they're saying that's it. What we're saying is this is the start. Now, the reason we put out a study is because we wanted to answer the questions about mining and processing before we spend more shareholder money chasing more resources. We wanted to prove that we have enough, and we've done that. So as we add to it, there are great opportunities there. I talked about the earlier stage project beneath the existing resource. So what we're doing now between this slide and the last one, I'll flick back. So you're taking this resource area. We're now going into 3 dimensions and we're looking beneath it. This is the surface of the Earth. This is 400 meters where we have our existing resource. And these are the drill intercepts beneath that. Generally in this area, the famous deposits are an iron oxide copper gold, and that is what these intercepts are. We have this major corridor which we're working through. We've put down about 20 holes, 21 holes in total. 18 of those were mineralized. Many of those very strongly mineralized. You can see here grades over 3% copper. We do not know what is happening here. We have just been through a 6-month process using modern advanced geophysics in order to try to see beneath the ground and to understand that. And you can see here on the map, what we have found so far are major structures. Structures is how the copper moves. And what we're looking for, both here and further down to the southeast, is an area potential of holding an Olympic Dam, a Carapatina, an Oak Dam West. We're currently looking for a partner to drill this with. It is expensive drilling, but the size of the prize is enormous. If you can be successful with this, and we are increasingly confident based on the work that we have a major copper system beneath the existing copper mineralization. There's an old saying in mining, the best place to find gold is in the shadow of the mine frame. In this case, the best place to find a world-class tier 1 IOCG is in the shadow of an existing world-class project, as we look for significant additional copper within a system we know capable of bearing that. So watch this space. What is the plan from here? It's always the most important part of the presentation. What have you got? Well, we've got an exceptional existing study, which we're working to improve, but already 570 mil MPV. Bear in mind, our market cap today is $25 million. An IRR of 26.5% with improvements planned. We've got a defined mine plan, and we've got a processing flow sheet to produce 25,000 tons of copper per annum and 1,000 tons of cobalt. We are optimizing that work. So the first pillar of our work, optimize, improve, get those economics up. The second pillar, find more of it. Build that with the optimization. That will be game-changing, completely transformative for the size of the project. Transformative IOCG discovery. So as we look to improve our understanding and then to go and drill and discover a tier 1 IOCG in an area just 16 kilometers from Oak Dam West, often described as the best discovery of the last 100 years, and in an area next door to Carapatina. Now, nearology, as it's called, saying you have something because you're close to something else is not always a great message. But when you're already sitting on 1.1 million tons of copper on the tenure, that's not nearology. That's good geology. And that's what we're focusing on. The last pillar is finding the right partner. We know that when the right partner is introduced to the project in the right structure, as we've seen with Xanadu, you can get massive increases in the share price. And that is what we're working on right now. So with that, I will pause and stop questions. And I will say, 我这次在说到这个Coda这个演讲，我没有用中文，但是如果有一些如果有人有问题，你可以用中文问我，也可以用中文回答。同时我也会看回写，所以如果你发一个邮件到info@codaminerals.com， 你可以发中文，然后我也可以用中文回答。所以我最近有点缺乏联系，所以有点害怕用中文这次演讲，但是也可以用中文回答吧。Thanks, George.
Thank you, Chris. 你的中文依然还是像以前那样讲的那么好，不用不用谦虚啊。
最近很缺乏联系的机会，所以我也欢迎，就是如果有股东有问题，你可以用中文这样我也可以联系一下。
多练习啊。Okay, you'll have a lot more opportunities. The first question came through in the early part of your presentation, which I thought you've already addressed in the later part of your presentation, but I will still repeat it here anyway. Are there any upcoming developments or projects that investors should be particularly excited about? Maybe you can just re-summarize.
Yes, look, the first major one is study update. We are working to optimize, expect to see the numbers improve. The second is the drill targets for the IOCG. We are, a little bit late with this. There are very good reasons for being delayed, some of which is how busy consultants are, and some of which is that we identified some areas that we wanted to do more work on to improve our understanding. But those results will be out very soon, and that is the targeting for the IOCG. So looking for that world-class deposit beneath the existing mineralization. So first, an improvement to the economics of the existing mineralization. The second is updated targeting for the IOCG. The third is that we have applied for significant tenure outside of the Elizabeth Creek area. Why? Because the downstream processing for our project, that plant does not have to be located at Elizabeth Creek. It could be located further south in South Australia. We're just 3 hours north of the major port at Whyalla and Port Pirie. And so additional mineralization to feed a hydrometallurgical plant capable of producing battery-grade cobalt in the world's most friendly ESG location in an area that has the world's highest penetration of renewable energy is very attractive. And so that is a longer term thing. The other two I mentioned will be out very, very soon. But those are the major developments. And of course, partnership, we are continuing to look for that funding pathway for the main project. And I believe that will unlock the share price significantly if we get that right, which we will.
Thank you, Chris. Well answered. The next one is, in recent times, the whole mining sector share price has been under pressure, and Coda is not an exception. Are we nearing the bottom? Do you expect the share price to continue to decline?
I hope we are at the bottom. The reason for the share price decline is complicated as a market. And that is partly because of concerns of China's economy. I believe that is a short-term issue, and I do not believe that will last for a long time. The second is concerns about rising interest rates in Australia. And what that has done is it has removed some of the smart money that generally invests in longer term projects. And it has left some of the gambling money that likes to focus on drill results. Now, there is nothing wrong with that money. I myself make investments, often expecting a 10 times return. But when you have a development project, that can be challenging when the market flees projects which are a longer term, high quality growth opportunity. And so I believe we are nearing the bottom for a couple of reasons. The first is it's cyclical. People will come back in, and as the copper demand increases with ongoing electrification, which, let's be honest, is certain, and as some of those concerns about the world economy, and especially China, which is the main consumer of copper for buildings, people talk about electrification, great, but that's a relatively small part of copper demand at the moment. Nearly 55% of copper demand goes into Chinese infrastructure and buildings. And so it is only normal that there is concern about that, but that will not last for long, in my opinion. The second is that electrification will increase significantly, and therefore that share of the market will increase. As that happens, watch the money fly to every credible development story going. We've seen it in lithium. We saw it in cobalt a couple of years ago. We saw it in iron ore. Watch it happen in copper. But copper is a $200 billion market. So that's a major part of it. The second with Coda is a recent lack of news flow. Sometimes you've just got to do the work before you can release the results. We are coming to the end of that process. So my hope is that increased news flow, strong partnerships, funding pathways, and improvements in the world economy will mean that the share price will fly. We see it time and time again in these mineral commodities. You see companies go up 5, 10 more times just because the market changes. It's incredible. I can't say that will definitely happen to every company, but we believe we are well placed with a strong project. The projects that benefit are the ones that are advanced and have good foundations, and we are advanced and have good foundations.
Indeed. Next question. How do you describe Coda's industry position in the copper sector? I guess it's now, and then what do you envisage the company in the future?
Within the copper sector, I believe we are quite unusual. Most Australian projects are low grade, very high capital, and are not looking to produce battery grade products. We have two amazing opportunities. The first is our pre-production capital is only $277 million Australian. You know, that's a touch over what, 160 million US dollars. This is tiny in the grand scheme of major projects. This makes it a lot easier to fund, and it makes it a lot more attractive to end users who are looking to help fund projects to get offtake. The second is our hydrometallurgical plant will allow the production of both copper cathode and battery grade cobalt sulfate in the world's premier ESG and renewable energy jurisdiction, South Australia. The third is just pure economics. We have very strong internal rate of return compared to peers, and we have used sensible assumptions to get there. I won't name names, but you will have seen companies recently putting out studies using $11,000 copper. We used 8,800. Using a 6.5% discount rate, we used 8%. Using assumptions including not needing a camp, water infrastructure disappearing. We have included all of this very carefully in our study. And so again, those foundations, I believe, give us a very strong, and by the way, without having to use any tricks, we still got to 26.5% IRR. So that shows, one, the quality, I believe, of the team, the ethics of the board, wanting to put out good technical basis, and that we don't have to play any games to get good economics. And so that makes me feel very confident that we will, one, attract the right funding, and two, that compared to peers, we're in a very good place. Sorry, that was a longer answer than I expected, but it's a subject I'm passionate about.
Yes. 我们有听众夸你中文超级好. Just a comment. Now, compare with your competitors, what advantages you have, or differentiating strategy you have employed? I guess you have been talking about that, but how do you answer this question?
Look, I think the first is that we published a scoping study relatively early in the process. I have been criticized for that because it is not a common thing to do, but I like to show people the technical foundations of the project. What though the next year should show is continued improvement of that. So that is our strategy. Continue to optimize, continue to explore, and to position ourselves. And again, the other thing that I believe we've done is to show the technical strength of the project early. So not to just hope that shareholders believe one day we'll be able to make it work. The story of Australian, well, world mining is littered with victims of projects where, you know, you keep exploring, and then you put it all together and it doesn't work. So our technical differentiator is that we've showed this works. We've showed we can produce what we can produce. We've showed how we would do it from the base project and then to grow from there. I believe that will attract quality money over time.
Yeah, you mentioned you have low capex. How does that compare with other projects in the sector? What competitive advantage that will give you?
I think it makes it much easier to fund and to progress. Mining CEOs are usually, I don't know, often people who like the idea of having huge projects and create 50-year legacies. And that can be attractive, although I can name dozens of projects where the size has caused them untold problems. The likelihood of capital increases is much higher when you have a high capex project. The challenge of finding funding is much greater. The just basic statistics shows that projects over $1 billion tend to blow out in costs, increasing costs by more than 25 to 40%. Smaller projects are easy to manage, they're more attractive, and they're easy to fund. We're still talking about a 14-year mine life. This is not a small project, but getting that moving and growing that to a longer mine life from the first base is a very strong advantage for us. Most projects we see, I mean, I will name names, but you know, Caravel, it's got an upfront capex of about 1.2 from memory, but if you look through the study, it's really closer to 3. And again, a lot of these projects, you know, sorry, it's generally frowned upon to name too many names, but you know, you're looking at other copper projects, KGL, Aeon, Rex, Caravel, all generally quite high capex. I can name some good ones as well. I'm happy to name others, but you know, that capex challenge is enormous. And if you need to build a plant that's producing tens of millions of tons, then your ESG challenges are greater. Everything becomes much harder. So I like medium-sized projects. I think they work, and I know that history shows that they're the ones that make money. If you look at the history of iron ore, the small hematite projects made shareholders a lot of money. The huge magnetite projects didn't. And I think there's a lesson to be learned there.
Yeah, we can definitely draw a lot of lessons for the Chinese investors in that sector in Australia.
Absolutely.
The next question, can you provide some key financial indicators that potential investors should consider when evaluating Coda as an investment?
Yeah, the first thing I will do is draw your attention to the research report from Pitt Street Research. This is available on our website, or if you email me at either chris.stevens@codaminerals.com or info at codaminerals.com. These both come directly through to me. It's the same email address. There is a lot of good information on both the project and the financial indicators, including independent, so research done by third parties that shows the potential value. The key indicators are net present value, $570 million pre-tax, which is commonly what is used. Post-tax is 340 million Aussie dollars at the moment, against a market capitalization of 25. The discount to net asset value backing, without even considering the value of exploration, is larger than it should be, in my opinion. And when you look at an enterprise value divided by resource, which is another way that mineral economists use to value mines, or future mines in particular, you will see that we are discounted. The EV over resource is discounted quite significantly. We're sitting at $20 per ton right now. The industry average, the last time I looked at it, was $130 per ton. Now, why is that? Because I can point to other projects that are cheap. It doesn't make them good. Why are we discounted but still good? The first is the history of the IOCG. Our share price rose very significantly. Unfortunately, that meant that there was a major change of register. And as some of the shareholders looking towards the IOCG history have sold out, that has caused some problems. The second is that development projects are currently oversold, sold down. And the third is the funding pathway as an extension of development projects being sold down. And so those are the things that we are working on and we intend to improve over time. But ultimately, you're looking at a project that has strong financial returns going into a strong forecast copper price with leverage to copper. And I believe that that is a very, very positive thing to invest. I just bought more shares recently myself, if that's any help. I think it's a very,
Indeed,
if I had
I
more
think,
money, I would buy more shares. It is a good investment, in my opinion. But
yeah, that's a strong indication the people insider believes in their own story. There are many more questions for you, Steve, Chris. I'm afraid we'll have to wrap up here. We already past our time. For those people who are interested in the company,